Hello and welcome, YouTubers. Here we got some interesting developments since the CES, I guess you want to call Jensen Huang's opening speech remarks. Remember, Sunday night, we talked last week that Sunday night there was going to be a press conference and some of the topics would be leaked, like AI, of course, NVDA, of course, autonomous driving, and again, all the other frills and gadgets that would be presented. But what really was going on here is that we've been kind of bullish, and not kind of, we've been bullish on NVIDIA. And we were looking for targeting several weeks back. We said, look to be a buyer near 130. And as we got up, our target area was around 155 on this particular trade. So what happened? As we gapped higher on Monday, we did put out an email alert to trail our stops from our long position in NVIDIA. When the market opened up in the pre-market, we almost got to that 155 profit target. Where did I get that from? Look at the pivot point analysis. What does that number say? 155. Now, could we see the market get up a little bit more? Sure. If the market was truly bullish on a gap, it should have a gap and go. If it doesn't, you want it to have a trailing stop, and that's exactly what we did. So now, where do we go from here? If you're interested in where we go from here, my two thoughts are simply this. Based on the technical, short-term, long-term, intermediate term, we still have a defined higher trend. There's still obviously talks that maybe NVIDIA sales with the laptop division, with the Blackwell chip for PC users and laptop retail users won't come out till like May. That might have disappointed the market. Great. And we could read about that. I'm sure it's in all kinds of publications. But technically, this is still a very strong market unless, listen carefully, we start to see daily closes below the monthly pivot point, and that's that blue line right there. So when markets are bullish, they tend to trade north of the pivot. The structure of the relative strength PMC is still positive. The volume is still positive, even though the market pulled back. So what did it do? The market closed back to where it was, pretty much last week. It still gave up some profits for those that didn't use stops, but all in all, the market gave us a nice trade. So my 2 cents is, while we are stopped out from the long in the 30s, long in the mid 30s, we took a nice little profit. I'm looking to re-enter that trade. Now, it's Thursday. Markets are closed due to the observance of President Carter's funeral. Monday, what do we have? Unemployment report. Next week, what do we have? More data, and again, slight earnings upticks, and then everyone's going to be preparing for the Federal Reserve. Big scare in the market right now, Treasury yields. We've got the Treasury quarterly refunding going through on, and the announcement, I believe, will be the first week of February. So higher yields is spooking the market as well. Jensen Huang came out and made a comment that quantum computing isn't going to be ready for another 15 or 20 years. And so QS and IONQ and all of the big quantum stocks that had a huge run-up fell and crashed on Wednesday by about 50%. I'm not interested in those stocks. I don't have a financial interest in them right now, so therefore it's not something I want to cover. What I'm going to cover is what's come out of my mouth, and I always like to take responsibility what I put out both in our advisory service, our newsletter, and our trading room. So, of course, we've been focused on NVIDIA, and that was a nice trade. Another trade that I was focused on is Dell Computing. Now, Dell, I believe we're going to go back up and fill that gap. And I think that this week, going into next week's option expiration, there's still some really strong volume trends. Even though we pulled back off of pivot resistance here, I think the market could regroup. If Friday's unemployment number doesn't reflect, again, there's 3 things that are keeping the market with a higher expectation of volatility and fear. And markets don't like fear. What are those 3 items? Higher yields. Why are yields going up? Are yields going up because people are moving money out of equities because they're afraid of stocks? Is it because of new fiscal policies under the Trump administration that are going to take place? Or is there something more cynical out there? Quite frankly, I think it's a combination of all 3. But once the market seems to get its footing, 2 things should happen. More upside potential out of technology. It hasn't gone away, and we should see this mid-tier gap here, or the upside gap in the market in the mid-130s get filled. If as long as the pivot support holds Friday and the numbers do not reflect strong inflationary pressures from wage costs in the monthly unemployment report, we might get a reprieve and a return to the upside in Dell. So we're going to find this out tomorrow. So the next week weekly options at 130.35 call spreads could still be pretty valid trade for the upside, and we'll keep you updated on Dell. As far as other trades, I want to focus on these. Look at this. This is something we brought to your attention, I don't know, last month. We've traded it a few times and made a lot of money. Cloudflare. Cloudflare, market's down, Cloudflare's up. It is losing its relative strength, and the volume is starting to eke lower, which means people aren't all that engaged in buying the highs. But I feel that with Cloudflare, NET, in that cybersecurity space, it had a pretty decent upside day on a single day volume trend. That's what the little green line kind of shows. It was a little uptrend. If we get a weekly close greater than last week's, we're still in a mired uptrend consolidation. Trend consolidation. Let's take a look at this on a weekly chart. It'll look more defined. There. It's more defined in a higher high and a higher low. Weekly volume's pretty present, is pretty powerful. And again, the week's not over. It will be Friday, and the relative performance is pretty good. So trend consolidation, what is the path of least resistance to the upside? As long as that monthly pivot level holds way down there at 109, this is a very valid upside trend trade that should last going at my guess is if we do an ABC measurement and look at pivot resistance, 125, 130 might be 128, somewhere between 125, 130 for Cloudflare. And that should take over the next 30 days. So option traders want to pay attention to that. The other one is another trade we brought to your attention was PSTG. It's called Pure Storage. Pure Storage, same thing. Look at the weekly chart. Volume. Nobody's giving that trade up. They're actually adding to the position. It hasn't broken out. The resistance is stubborn, and it's going to take time. But it's been a big, strong benchmark breakout candle pattern, or a Marabuzo, as more candlestick aficionados might know or refer to it as. And midpoint of Marabuzos act as support. It has. Again, rising moving averages, improved relative strength, PMC readings with higher, stronger volume longer term. This is a trend trade that also has potential. Some guys might be looking at this as positive momentum. Positive momentum over time means price performance has been going up over time. The current price is greater than it has been over time. So it's in a positive momentum trend, and it's one to be considered for breakouts. Now, what is a breakout? Here's a last conditional change. Now, these terms that I'm giving you, last conditional change, all written about in my books from 20 years ago, really, or 15 years ago. Let's not put me in ancient dinosaur times. But the last conditional change is something I wrote about a long time ago. We actually put this in our indicators on most platforms. TradeStation has it, Wealth Charts has it, Trade Navigator has it. All the big guys that have my indicator package have these tools. If you get a close over these gray lines, those are resistance. Closes greater than gray lines is positive. Here's a gray line. Relative resistance on a last conditional change. Powerful closes combined with better, improved relative strength and decent volume promotes more momentum, and trend followers will jump on it. So you want to watch for a positive breakout. If Pure Storage gets a close greater than this 60, let's call it 66 and a half, 66 and a quarter level, odds are it's going to have a big rip. So upside options over the next 30 days is one to follow on Pure Storage. I was impressed also while the stock market was down. Notice even on this daily chart, Pure Storage had the relative performance where it went up, stock market went down. Lastly, we got two trades we're going to look at. First, Snowflake, artificial intelligence used in their data storage and cloud storage business model. Only thing I don't like about this near term is that we've been very bullish. We made really good money on this trade to the upside. We developed a long position. As you can see, the stock was trading greater than pivots. If bullish, market trades greater than pivots. That's my rules, especially Person's pivot analysis. Great volume and relative strength was starting to improve. Earnings came out, it broke out. It tried to come down to the midpoint of the gap, fill it. Again, stock market was down. This stock was higher. So cloud storage, I mean, this one might see, it needs a close greater than, let's call it 168. Also, that last additional change. And in this area, which was old support resistance, and you can clearly see it on the charts that I've highlighted here, a greater close than there would give you a potential extension that should get us into the 200. This might need an earnings play or get near its earnings season. So we'll be watching this over the next couple of days. MongoDB is another one in that sector. Volume's starting to get nibbled down here at these lows. But relative to the other names I gave you, MongoDB might need a little bit more time. Second to last trade, NDAQ, NASDAQ. NASDAQ generated a PPS buy signal. It's pulled back off its highs. If the stock market is so bearish, nobody buys exchange stocks. The leadership in their technology and their platform should offer investors a good trend trade as well. Let's take a look at the longer term. Here's the weekly. The weekly's in a down mode. If we can get and reverse this, we have kind of like some funky negative selling, which indicates possibly profit taking. But it's on my radar screen because if we flip from, and I won't know this on a weekly chart until Friday's close, but if we close greater than the open, form a nice hammer pattern, the short term is kind of giving us an indication that NDAQ could get a newfound uptrend to not only test this high, which is around 83, but take that high out. So NDAQ is one to follow and watch as well. So Friday's got some important trend trades for the long side. Those are the names: NET, PSTG, SNOW, NDAQ. Last and final, let's look at bonds as represented by TLT. Ugliness on Wall Street. And they say bond boys know best, and I should know that. I traded bond and bond options in the early 80s when they were first introduced in 1984. Little history for you. It was two guys from the Chicago Board of Trade. The first options that was introduced on a futures contract was the bond market, the 30-year bond market. It was Jay Sorkin and Bob Young, I believe it was Bobby Young. So Bob Young, Jay Sorkin were the ones that petitioned to get the options to trade, and the first experimental market was bonds. And as you know, back in 1984, 85 through 86, we had a new president. Ronald Reagan came into office. Interest rates were coming from 19% straight down. When yields go down, bonds go up. We had the most dynamic bull market in history back in those days, and trading options was a trend trader's dream come true, and that's where I cut my teeth on trading. So in that era of trading and options, I've been following bonds. It's, it has been a passion. So bottom line, the bond market right now, and I got to tell you, as we look at the ETF and not the futures, there's a couple things that come to mind here. This is a weekly chart. This is the old low that we had in 2023. My 2 cents, this is like a potential double bottom pattern. With the refinancing going on, again, quarterly refunding needs is something that might be pressuring bond prices. And I think a lot of people were thinking that the bond market could see a higher price, lower yield, because the Federal Reserve was going to lower rates more. And then Jay Powell came out in December and said, no, maybe only 2 rate cuts going forward. Inflation hasn't been that great. And so what happened? The market reversed that trend psychology, sold off on the bonds through the holiday and the first week of the new year. Now, my 2 cents is the relative performance has gotten way overdone. The volume is super light over this time period with newer lows, so it's kind of illustrating a bullish convergence pattern. Bonds can be very treacherous and tricky. And what they can do is they can go down and really smack retail traders and institutions or hedge funds who are highly leveraged and get them out and really trend. And then when they reverse, it's hard to jump on the reversal to the upside. So this is one that might be a very powerful option trade. And you can kind of clearly see in the volume that we have a new lower low. And then from this area in here, we have a newer lower low. And you can look at the volume and say, nobody's really pressing this market on heavy volume at these lows. So it's subjected. It's not a guarantee. I'm saying it's subjected to a sharp, short covering, bullish convergence, upside movement over the next 30 to 60 days. So I'm advocating and telling people you want to probably go for cheaper because of the condition of the market. It's not a guarantee, but you would probably take a look at the 88 March upside calls. And if this market does get a rip, because let's review, if the Trump administration, once he starts signing executive orders, if there's positive acceptance that inflation is going to pull back and the Fed can then be more eased on lowering rates now back to 3 more times in 2025, guess what happens to the bond vigilantes? They start coming in and we start buying up the bonds, especially if we see that our quarterly refunding is reduced because government expenditures are going to come down because they're going to do some house cleaning, so to speak, on unnecessary expense. So it is a train of thought that would be viable to see bonds rise in that environment because everyone thinks that Trump's going with tariffs, 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 and he's going to destroy the global economy. And, quite frankly, there's always that element that the whole world could be right and John Person's wrong, but it's just too much of a strong narrative and everyone's copying that narrative. And I think when that's what a contrarian trader is all about. When everyone thinks it's student body left, you turn right. And this could be an exciting trade for a low risk upside. That's my 2 cents in the market. And that's what we've been telling our investors in my advisory service. And if you're not familiar with my advisory service, for almost $1,500 a year, it's less than that for a special discount that we've offered over the holidays. You get my newsletter with my active email alerts on trades. You get access to the live trading room, which will put you in tune with our, most people don't realize this, but you will get access to this page right here. It's the algo page where we have active live trades that are projected not only on the charts, but on the tab, which tells you when they got entered, what the position is, a strategy price. We go through the performance and share people while it's happening live. The NASDAQ, which I know I followed up a week ago, a week prior to that, it is now into another new equity high as the NASDAQ trade strategy. The ES, as you can see, since the beginning of the year, buy, sell, buy, sell. It's in a chop range, and it's gotten long, got out, got short, got out, got long, got out, and that's what these lines represent. If it's a blue line, it's a good trade. If it's a red line, it means it got stopped out. So if you take a look at the crude oil, this entered a trade during today's holiday session, President Carter's Memorial Day of recognition and his funeral. And there, if it's a red line, it shows you where it entered and where it got stopped out, and that's the progression. And you not only get that for our advisory service, but remember, anything that I post in our live trading room, as far as an alert, like an option trade, like bull call spreads or for earnings, you come into the live room, sign up for the mobile apps, and you'll get our text alert. So you get access to what the trade room recommendations are, or at least ideas on option trades. You get newsletter, you get weekly advisory service access, and again, you can come into the live room and check out what the algo and the main trading room strategies are doing in our equity performance, which obviously it's a day off and the market's closed. So with that said, have a great rest of your week. God bless you guys, and we'll see you at the next YouTube update. Hopefully these trades will keep you in tune to the market into next week and after, again, the monthly unemployment report, which will be exciting to see what happens. Thanks for listening. Have a great rest.